Analysts say India had a reasonably good recession, if not on the same level as the Chinese mainland. But what are the best strategies for traders? HKTDC's Mumbai Consultant Rajesh Bhagat has been providing his views in briefings in Hong Kong. So Rajesh, do you see Indian companies shifting their focus towards Asia and away from Western markets which have become weaker?
Actually, largely speaking, India remained quite unaffected with the global crisis, primarily because our banking is not yet as exposed as the more mature markets, and also we are having a high growth rate. Also, our exports, we are not an export dependent economy. We just have got about our export share in the GDP is about 22%. So, but of course, you cannot say no economy can be safe from or is insulated against any global crisis. So we are definitely looking towards Asia to develop our export market. After the US, China is primarily become largest trading partner for India. So we will definitely look towards China to increase our export share. We have just signed an FTA with the ASEAN market. So we would be definitely looking at ASEAN to develop more and more exports to ASEAN, also primarily getting more and more imports from ASEAN. So there would be a fairly good exchange of products and services from the Asia sector and ASEAN together.
So how does Hong Kong really fit into the picture as a pivotal market for that Asian trade?
Hong Kong will always be an important market for India because not only for exports to Hong Kong and China, but even for exports to the other markets. For even if we want to increase our export share to ASEAN, for example, we will always take advantage of the platform which Hong Kong offers. Because Hong Kong is an international city, and buyers from all parts of the world come to Hong Kong. So India cannot ignore or cannot reduce its emphasis on Hong Kong as an international gateway. So as I was saying, India needs to step up its exports. Our share today is only 2% of the global trade. The government wants to target to double this share by 2020. And if that has to happen, our exports has to go up from the current US dollar $665 billion to 2,400 billion. And that cannot be done by ignoring or reducing emphasis on any major market like Hong Kong.
Some traders say that it's actually quite difficult to enter the Indian market, partly because of competition, partly because of regulation. But do you think that's going to be changing anytime soon?
Yes, India is perceived as a difficult market. But as I was saying, and I've been saying it all over, that red tapeism is giving way to red carpet. So that is true for all government departments. We are looking at increased FDI from all parts of the world. We want more and more companies to set up shop in India. And though our global ranking is 133 for ease of doing business with, we are quite confident that this ranking will go sufficiently up because we are trying to create single window clearances. We are RBI, that is the Central Bank of India, Reserve Bank of India. Though we need to have prior approval, it just takes 2 weeks to get the prior approval from RBI. So we are trying to set up various procedures which would simplify setting up shop in India.
Several Indian banks have set up here in Hong Kong recently, but does that mean that Indian companies are heading for the Chinese market or for a much broader perspective in the Asian markets?
It's more than that because I think the financial market in Hong Kong is a very mature market. And though India, our financial market has evolved and Mumbai has become has evolved to become a major financial hub within India, we still need a global platform for our financial services. So we look up to Hong Kong for all types of financial services. More and more Indian companies are coming and setting up shop in Hong Kong. And even many Indian companies are doing business with China. As I told, China has become India's largest trading partner. So it is quite an obvious sort of a choice for Indian banks to set up their base in Hong Kong to facilitate the trade, to facilitate IPOs, to facilitate listing by Indian companies in the future. We hope that more and more Indian companies would be even listed on the Hong Kong Stock Exchange. So I think this is just the preparatory ground where more and more Indian banks are coming and setting up shop in Hong Kong. What we have really not done so far for Hong Kong brands is to bring them in a big way to India. there's a lot of awareness for Chinese products. In fact, China products are easily available in India. China has been fairly aggressive in promoting their products to India through trade platforms, bilateral exchanges. But Hong Kong has taken a backstage. But I think that is going to change this year. We are with the Xi's visit in October from Hong Kong and from Guangdong province, the governor's visit. So Hong Kong companies have taken a backstage till now. But I think that is all going to change, because in this year we are going to have a major promotion of Hong Kong brands in Mumbai through Lifestyle Expo, and the chief executive of Hong Kong as well as the Guangdong governor are going to make their visit to Delhi and Mumbai to time along with the Lifestyle Expo. So I think it will be a major promotion for Hong Kong products in India. But let me tell you, Hong Kong products are perceived to be a very high-end quality products, and if they make inroads into India, they will be welcomed and embraced. So I'm quite sure that Hong Kong companies will do well in India.